Welcome back to Investing Talk Podcasts.
Today we're looking at Eli Lilly. The big question is it a good time to buy now?
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis of the sources you shared. We have a pretty clear investment thesis here. It's built on, well, truly explosive growth. But the real question is whether that massive premium valuation is, justified right now.
Yeah, when we look at the fundamentals, explosive. It almost doesn't do it justice, does it?
Right. We usually talk about tech startups when we see numbers like these.
Exactly. Not an $800 billion pharmaceutical giant. That Q3 2025 revenue headline. Just wow.
$17.60 billion.
Yeah.
And that's a 54% surge year over year.
54%. That number really is the core here, isn't it?
It absolutely is. It's sector-leading top-line expansion. And we know exactly where it's coming from.
Mounjaro and Zepbound, the diabetes and obesity drugs.
Precisely. That blockbuster duo, their adoption rate is just accelerating so quickly. Analysts have basically been forced to tear up their old models.
Right. They're increasing the full year 2025 earnings forecasts because of it.
Which just confirms this huge secular demand tailwind. But crucially, this growth isn't sloppy.
Okay. What do you mean?
Well, their profitability is equally robust. Look at the net income for the trailing 12-month, the TTM.
Right, TTM.
It's $18.41 billion. That supports a really strong net margin, around 31%.
31% margin. So that shows operational leverage. They're scaling efficiently.
Exactly. They're handling the growth well.
Okay, but we have to talk about the elephant in the room.
The valuation.
The valuation. The market cap is nudging $803 billion. That puts it among the world's largest companies.
And when you look at that valuation, yeah, it screams expensive.
A PE ratio, 43.86 TTM. Even the forward PE is over 30. Wait, hold on. 44 times earnings. How? How can we possibly justify paying that much? Especially for pharma. Even with 54% growth, that sounds like the market thinks there's zero competition.
Which we know isn't quite true in the GLP-1 space. There's that big European competitor.
Right. So what is the market really betting on here? What's the insight from the sources?
Okay, so the market seems to be betting on differentiation. Yes, there's competition, but investors seem willing to pay this premium because they believe Lilly's specific molecule, maybe its delivery or its next-generation pipeline.
Ah, the pipeline.
Exactly. Offers superior long-term dominance in metabolic health. They aren't just buying the current growth, they're buying perceived structural superiority in a massive multi-decade growth category. That's the bet.
That framing makes more sense. And interestingly, there's a sort of safety feature here too, right?
That's so.
Well, for a stock growing this fast, it trades with surprisingly low volatility. The beta is only 0.39.
Oh, that's low. Significantly less movement than the overall S&P 500. So that low beta plus high liquidity and the strong balance sheet you mentioned, it helps offset that valuation premium somewhat.
You're paying a high price, but getting some resilience with it.
And that resilience seems confirmed by the technical picture looking at the charts.
Okay, let's unpack that momentum then. As of November 4th, the stock's trading at $906.62. And the price action itself, it's showing that consistent pattern. Higher lows, higher highs.
Yeah, a classic bullish uptrend confirmation. Clear as day.
And beneath that trend, the support levels look incredibly strong.
Definitely. It's trading solidly above both its 50-day simple moving average.
The SMA, yeah. That's around $780.
Around $780, right. And the 200-day SMA, which is closer to $789.
Trading consistently above those key averages, that confirms the momentum is persistent, not just a flash in the pan.
It shows underlying strength.
So the short-term forecast looks bullish, too. We've got strong technical support pegged around $857.
Right.
And the models we looked at, they point to an upside target reaching $1,008. That's for a bull close forecast in December 2025.
Heading towards $1,000.
Wow.
And if you look at investor psychology, the relative strength index, the RSI.
Where is that sitting?
It's at 63.03. Now, this is crucial.
Why?
Because it means the stock has strong positive momentum, but it's not technically overbought yet.
Ah, okay. So there's still room to run, technically speaking.
Exactly.
Yeah.
There's still clear technical runway for that potential move towards the $1,000 target we discussed.
And the professional sentiment seems to back this up. Analyst consensus is moderate buy.
Yeah, with 16 out of 25 analysts rating it buy or strong buy?
That's right. And the average 12-month target range points towards $967.43. So analysts see more upside.
What's really fascinating here, I think, is the institutional conviction. Ownership is massive.
We saw that Cantor Fitzgerald reiterated their overweight rating recently.
Right, and when you pair that external confidence from firms like Cantor with the internal signal.
You mean insider buying?
Yeah, recent insider purchases by executives. At significant values, too. It just reinforces this belief that the growth story has plenty of track left.
Okay, so that's the current picture. Strong fundamentals, strong technicals, strong sentiment. Let's shift focus a bit. What are the catalysts? What's going to drive this price action over, say, the next 3 months?
Good question. The immediate focus is definitely the Q4 2025 earnings release.
Expected late January 2026.
Correct. That's the big check-in point for the market. Did the explosive growth from Q3 continue?
And given the ZEP-bound adoption curve, analysts are betting yes. Continued strong year-over-year growth.
That's the expectation. Then you have key regulatory events.
Expanded indications for Mounjaro and ZEP-bound.
Exactly. Every time the FDA or another agency approves wider use, the potential market just gets bigger, instantly.
So that's immediate fuel for the top line, rapid growth from those imminent regulatory tailwinds.
And then there are the market mechanics in December. This gets interesting.
Okay.
You need to watch December 10th. That's the major ETF quarterly rebalancing.
When index funds have to adjust holdings.
Right. And then December 22nd for institutional buyers' disclosures. These dates can increase volatility, sure, but they often force passive funds and big institutions to reassess.
And potentially increase buying pressure on a hot stock like this.
Precisely. It spotlights the momentum.
We also can't ignore the speculative buzz, right? The rumors.
Always rumors in pharma. What are you hearing?
Well, talk about possible accelerated FDA approvals, not just metabolic health, but maybe Alzheimer's pipeline assets.
Okay, could be huge.
And also some chatter about strategic partnerships, maybe focused on digital therapeutics, enhancing patient monitoring, that sort of thing.
Interesting angle. That digital health piece actually leads us nicely into the long-term justification for that huge market cap.
The competitive moat.
Exactly. Lilly already leads in diabetes and obesity. But the real differentiator, the thing justifying that premium, is the pipeline beyond the GLP-1s.
Okay, tell me more about that R&D depth. Why is their pipeline considered so superior that it warrants paying 44 times earnings today?
Because they're positioning themselves for potentially a second game-changing franchise.
A second one?
Think about it. Their strong R&D in Alzheimer's, in oncology, autoimmune diseases. That's what promises those long-term, multi-year revenue streams. Specifically, the potential of donanemab for Alzheimer's. That's the biggest card they hold right now.
So if they can replicate the Mounjaro ZEP-bound success, but in Alzheimer's?
They've effectively doubled their growth runway and potentially locked out competitors in another massive market.
Wow. Okay, so the valuation premium isn't just about Mounjaro's current success. It's the market basically pricing in success for the next wave of drugs, too, especially something huge like Alzheimer's.
That's precisely the argument. Their diversified platform, their track record, it reduces exposure to normal pharma risks.
Like patent cliffs or pricing pressure across the board?
Right. They seem to have this continuous cycle of innovation baked into their model.
But, okay, we always need that dose of healthy skepticism. What are the key downside risks for you, the investor, to keep in mind?
Number one, especially given how much rests on that pipeline we just discussed, is execution risk.
Meaning delays or failures in trials?
Exactly. While their recent success is comforting, any significant delay or setback, especially for a high-stakes drug like donanemab.
That would hit investor confidence hard and hammer that valuation multiple.
Absolutely. Then there's standard regulatory risk, always there in pharma.
Adverse decisions, or more likely government pricing pressure. That's a constant tail risk.
It is. And finally, while we noted the low beta, you can't ignore broader market volatility.
If the whole market tanks due to inflation or geopolitics...
Even a high-quality name like this will get pulled down just on correlation effects. It's unavoidable.
Okay, so let's bring it all together. What does this mean for the listener? Let's summarize the final thesis based on these sources. We've got explosive, efficient revenue growth.
Check. Powered by massive secular demand.
Or rock-solid financial position.
Check. Confirmed technical uptrend.
Yep. And crucially, that robust competitive moat built on pipeline depth.
So overall, the investment case looks exceptionally strong. We'd give it an overall bullish rating of, say, 9 out of 10.
9 out of 10. Pretty strong.
Yeah. It looks attractive for both near-term players, looking at Q4 earnings and those regulatory catalysts, And also for long-term investors who want leadership in these huge secular growth areas like obesity and potentially Alzheimer's.
So the premium valuation seems warranted given the scale and quality of their innovation.
That's the conclusion from the analysis, yes. A unique combination of factors.
A truly high conviction analysis based on what we've seen.
So maybe the final thought to leave you with is this. Given the sheer scale of Eli Lilly's current success in obesity and diabetes, the key question now isn't if they can grow. We know they can. It's whether that long-term pipeline, especially in massive new fields like Alzheimer's, can actually replicate this level of dominance in a completely different category. That's the real challenge and opportunity for the next decade.